Okay, so that's the study of the 7. It's knowing, as I said, how I got into I didn't explain the story how I got into this book. But the one thing that got me to be writing this book was the obsession for accuracy. You understand? I wanted to know that there's so many things I know. I know I wrote some stuff here, but not everything that I couldn't just But this information that is disclosed here, the information that I'm going to be giving here, it is enough to make you so much money. And I didn't realize this, but the 1 to 2 p.m. trade that I always take, that's where I made most of my money. Most of my money. Last year I made something, Say what? Okay, so hey guys, in the flu, as I almost didn't come here because when was it? Yesterday and the day before, it was bad. I don't know, you know, I was so I didn't want all of that, but luckily, we're cool, okay, so now what is this 714 method? Okay, to make it better, let me read from the book so you know exactly. Funda magama wami. Now clap. What is this 714, right? The 714 method is a study of specific price action that happens every day as the nature of the market. The study is based on time and price. It has been proven with evidence that the market is specific and perfectly balanced. It is not a series of random price action. The market was never designed to be analyzed using supporting indicators or even multiple strategies because it's simple based on price and time and everyday activities as it's happening in other countries. You got that? It is a study of specific price action that happens every day as the nature of the market. The study is based on time and price. And what I really like, after I did this book and issued out the 714, most people now, if you hear them talking, they were like, the most important factor of trading is time. So it's very important to specialize on time. So that is how they're trying to chow your money now. They will just add time there. There will trend lines, but time. So you pay. Okay, so that's the study of the 7. It's knowing, as I said, how I got into I didn't explain the story how I got into this book. But the one thing that got me to be writing this book was the obsession for accuracy. You understand? I wanted to know that there's so many things I know. I know I wrote some stuff here, but not everything that I couldn't just But this information that is disclosed here, the information that I'm going to be giving here, it is enough to make you so much money. And I didn't realize this, but the 1 to 2 p.m. trade that I always take, that's where I made most of my money. Most of my money. Last year I made something, but I made more than 5. That's million. So, doing the same thing, it's not about hard work. It's not about you doing the start. So, understanding that 714 method is a study of specific price action that happens in a specific time. It's times, but... So now, here's what you do. How I trade personally, I trade from okay, 1 to 2 South African time, SAST, South African Standard Time. That is the time that you will be looking at the market So from 1 o'clock, you will set an alarm. Set an alarm. You can label it observation time, right? Observation time. I don't know, whatever that makes it easier for you. 1 p.m., you mark it, you set an alarm, you label it observation time. 2 o'clock, you set another alarm. Even if you're working, do this. You set an alarm, and the label will be execution time. Imagine, you don't need signals. When your phone rings, that's a signal. You just execute. Easy. Okay, 1 o'clock, this is our time. This is just to show you. 1 o'clock, you set an alarm. You write observation time. 2 o'clock, you set another alarm. Execution time. Very much important. So, this is how this is going to be depicted. You're going to have these vertical lines. The first vertical line representing 1 p.m. and the second vertical line representing 2 p.m. After now, before this, the first alarm will ring. The first alarm will ring, the one at 1 p.m. When this alarm goes off, you will put this vertical line, right? Let's write put vertical line and mark opening million lamb price. Okay? Mark opening price. How do you do that? From 1 o'clock exactly, Malkali alarm, you watch for that candlestick, even if you wait 5 minutes. But Malvolo, how much is your experience? But where it's gonna start, that is where you're going to mark your opening price. You put a horizontal line like this. Yeah, you put a line like this, not low or horizontal low, but throughout. You use the trend line and you mark it out. Not strategy. Use the tool. So you mark the opening time there. Like so you can either have one of these two things. When the market will open at that time, you can either have a bullish candlestick or a bearish candlestick. I will do it like this. Okay, so this is sell, this is a buy. So if the market is going up, right, if the market is going up or the candlestick is bullish, it will open at the bottom. That's where these candlesticks, it will sit exactly here and then go up. But if the market is bearish, which means it's going down, this part here on the high will sit here and then go down. It will be like that. But whether it goes up or down, it will start from the 1 o'clock exact time. So that is the price that you're marking as your opening price. Why is that price important? There's so many things I can tell you. But if you want, I was 1,000 lapambi. The most important parts of understanding this price, if I'm selling you this pen, right, I'm not just going to say I'm selling a pen. There should be a price. If I'm selling it now, there should be a price. I'm selling this pen, it goes for 10 rand. So you know it's okay, I have 10 rand, I want to buy the pen. But if I'm just going to say I'm selling the pen, what price, you know, What's for exchange? So that is not accurate, that is not precise. Hence, if I tell you, this is where this is how much I'm selling, whatever I'm selling, then you know what this is the actual price I'll execute on. You got what is I showing you there? You don't just execute anyway, comrade. You don't just say, hey, break it, hey, no. Wait for price. So now, this being your opening price, the market can either do one of two things. Now you sit on your hands, you wait. Why are you waiting? Because I told you the time and I told you what to expect. So that's there kills impatience. Now you cannot tell me, hey man, I can't wait, Masha, I can't wait. Yeah, well, the only thing you have to, okay, never mind. So you wait. Why? Because you know the time, you know what to expect. So from this 1 o'clock now, the markets will open, go up. Or if the market opens, goes up, or if the market will open, go down. You want to see either one of these two things. So in your mind, you're just sitting there and you're like, these are the two possibilities of what might happen. So you just wait. Seeing the opening, market went down, open, it went up. Right? So if now the market will open, goes up, what do? 2 o'clock, go down. If the market opens, goes down, 2 o'clock, it will go up. It will do the opposite. Don't take my word for it. Take what I'm saying right now. Go do your homework. You will see the results. I'm here to challenge you. May I understand, I'm at a point of not losing anything right now. Yeah, well? So it's only you who stands to lose. And if you don't do this, you lose more money, you lose more time. Yeah, well? So this is what the market will do. No confluences, no divergence, no moving averages, no indicator, no nothing. This simple, naked understanding. Clean. Right? So once you've seen this, what makes this a better trade or better way of trading? We are always looking for 50 pips. We are always looking for 50 pips whenever trading this setup. So now this change, I told you what type of a trader am I? A specific trader. I don't just trade for the sake of trading. If I trade, I want to know when, what price, when am I getting out? So when I make my money, I know exactly how I make my money, of which is what has given me the advantage to be able to repeat the wins that I've been repeating. Doing the same thing, bank balance going up. Simple. So now we are looking for 50 pips. So from here, if it's gonna go up down to here, maybe I'm looking for 50 pips. Sometimes it will give me before reaching the opening price, but sometimes it will, sometimes it won't. But I'm looking for 50 pips. Whether they go to the opening price or not, I'm looking for 50 pips. Sometimes it will buy from here, go up, and then give me my 50 pips. That is what I'm looking for. But all of this is based on this primarily understanding that if the market from 1 to 2 SAST, if it's going to go up, it will sell from 2 o'clock, 50 pips, you're done. That is standard. 100 pips, yes, you may, but 50 pips, that is primarily standard. You take your money and you're gone. I will show you the power of this thing. Same thing here, right? Someone will ask about the risk. Yeah, what is the risk? Yeah, you never showed us risk. So when it comes to risk, for me, per trade, I risk about 50 pips max. I don't go about 50 pips, right? That's if I use a stop loss, but which is a rare case. So 30 to 50 pips. But 50 pips is maximum for me, right? Because on a serious note, guys, this thing of 1% risk management, I don't believe it, man. We don't have that type of money. Like 1% risk. Yeah, if you're trading $1 billion, yeah, 1% is making sense. But if you're trading 1,000, 1% of the guys, come on, let's be realistic. You know. So either we do on 1,000, you're risking 400 for another 1,000, or you're risking 500 for another. So now, this here is what we want to see happen in the market. We're always looking for that. And then when it comes to execution, there's 3 areas of execution. In as much as I've said it before. So before you execute, what are your main reasons to actually execute a trade? The first one being time. 2 p.m., you see the structure, it's been going up. 2 p.m., no questions asked. You don't phone me, you don't check on me. Hey, Masha, I think I see Futek. Execute. Execution. Okay, 2 p.m., which is based on time. You execute based on time. And then the second one, right? The market has been going up. The second one you execute based on the opening price. That's your dealing price. Okay? OP. I'm going to use OP for that one. So write in full in your sentence, in your notes. Opening price. Don't use OP because it'll confuse a later. And then the last one, based on structure. So those are your 3 reasons of execution. The first one, you execute 1 to 2, market has been going up, 2 o'clock, bam, sell. The second one, maybe the market was just ranging, you like watching, it's sitting at the opening price, you sell, goes up. That one, you're looking at the structure, okay, maybe it's delayed. Most of that applies when the market is going to move a bit early or it's just going to delay. So you're looking at the structure like, I go and see, it's still coming. Then you execute based on that. And the market moves, you're done. Okay? So let me show you this. I want you to see exactly what is this 50 pips we're talking about. Okay, just gonna put it in. What is this? M15. Let me go to M5. M15 is just 2 candlesticks. So if I go to M5, it's that range. It is only this range. Can you see it? It's that much. Just that. This is M5. So it took about 5, 10, 15, 20 minutes to hit, right? 20 minutes to hit. Okay? So that is the first structure that you need to. This is primarily what we're looking for. So I'll tell you where you'll say, fuck Mashai. Okay? I know all of this. So the second part now, that you should understand we have the same scenario. Okay? 1 to 2. You are there, Mashal said, okay, there's an opening price. Market will open here. If it goes up, I sell. The market opens indeed. It goes up. It comes down to here. Maybe you make your 50 pips. Opting, it's going to continue to drop. Thinking this, right? And then the market just reverses here. And then it goes up. And then you say, fuck Mashal. Right? So this is the first scenario of the market will do this. But when will the market do this? You are mostly to experience this type of price action. Understand, price action is not a strategy. It's what the market will do. So when you pay, it's price action, advanced price action. Ka-ching. So now this structure, you are mostly to experience it when the market is bullish. And it's just like, So on this particular day, you might assume, oh, it's coming back down here. You're like, it's reversing. And then they just immediately come back to the opening price, retest, continue to go up. Gold did so many of these last week. And if you want to experience this, go to a bullish market. Study a bullish market alone. That is how you backtest. If I show something based on a bearish market, go to a bearish market, study a bearish market alone. While you're doing this, you're building experience. The more you see it, the more you're going to collect evidence, and it's going to be easier for you to actually put this into action. So you know, when the market is changing cycles now, back into bearish market, you know it's okay, based on my experience on what I've collected on the bearish market, this is what I'm looking at. You go back to your notes, you focus on that. When the market changes direction, it's bullish again. Now you're like, okay, yeah, well, you're there. So this is the first scenario of a continuation. You've seen that question most of the time. Yeah, but a continuation. What's not a continuation? Okay. Continuation. Right? So that is the continuation. The second scenario of this setup not happening as it should is when the market will move a bit early, right? Let's say this. It will move early. So the market will go up before 1 o'clock and then just comes back to retest on the opening price between 1 and 2. And then right after that, it just continues to go up. You wait for a retrace, you get nothing. You see like it's going to come back, you get nothing. Maybe you chase it to the trade. Amasha said it's going to go up, and then it's 2 o'clock, it should come. You place a trade, it's just like, have you seen when the market is just executed and the chart is like expanding? So you are most likely to experience such things. But also, this happens in a continuation, as you can see. The only difference is this one, they move a bit early by going up, dropping exactly at the time, but this is where the magic happens. It will go to the opening price, bounce here, and then continues to go up. So if you can station your stop loss always around this base of this price here or over here, then that you are most likely to limit your losses. Okay? So this is the continuation now. And then the last one is when the market will move. I don't know. Okay, the last one is when the market will just move a bit late. Say it's just gonna continue to go up even, and then later dropped. You see, like it's been bullish. So coming down from 1 to 2 is just gonna go up, and it goes beyond, maybe up until 2, 2:30, 3:30. It's a delayed. This is an early move. This is a delayed move. Okay, delayed. It's going to move up until 3:30 or 3 o'clock, and then later drop in the day. Possibly you would have given up on that setup when it happens. Eventually, there's nothing wrong with that. You just let it be. Okay, so you have these 3 scenarios. The market will go up, come back to the test, continue, come back inside of the opening price between 1 and 2, retraces there, continues to go up. The last one is a delayed price action. May continue or bounce off here and then just goes up. Okay, I'm going to use red more because it's more brighter than this one. Okay, and then bounces off there and continues. So these are 3 types of continuations. Samsana comrades. On the same page? Yes. So remember this one, okay? And then the other scenario of the unexpected, because right now we are getting ready for the unexpected, okay? So the other part that you could see unexpectedly is when the market will open, go up, break, retest, and then go down. This setup here is an immediate reversal. Immediate reversal. Basically, this one happens in the beginning of a bearish market. where you are thinking in your mind, the market is still going where? It's still going up. But then it just comes back, retraces, back to the opening price, touches the opening price, and then it continues to go down. Yeah, some they call it head and shoulder. Yeah, I know head and shoulder, it's working. But the fact is, by the time you see a head and shoulder, the price action is already done. So you are chasing patterns, not price, not a specific number. Whereas for me, I'm doing a specific number. That's the difference. You can say it's a head and shoulder, but you don't know where your shoulder is going to sell. And I know. My last obsession, the last crazy part of me in terms of trading, I can tell you what the market is going to do from morning till night. Looking at it like this, in and out. Yeah, I was just like, I do have my freakish part, but I stopped because I was going to be crazy. And end of the day, I saw which it's pointless for me to like do the in Kazaba. Like, it didn't make sense because it's all about money at the end of the day. It's, I can tell you everything. Yeah, but I had that part because when I was studying, I was like seeing a lot of things people they don't see. So the one thing that I like about the 714 method, it's the perception. You get to see things that no one else sees, and even if you try to negotiate or talk to someone with them, you'll always end up arguing. They will never see the things you're seeing. Because when you're looking at simplicity, they are looking at confluences. Yeah, it's a break and what? Yeah. So that's why it's better to just mind your own business with valently. Pumusiyotenga mapi. So I want to push away. Right. So this one, immediate reversal. Market just goes up, breaks, continues down. Also, it can go up. You see? You're going to say, well, it's an M formation, it's an M formation, it's a double tops. It can do that. Goes up, touches on the opening price inside, goes back to it, that's where your trade is. So basically, if you're going to buy here, with intent which is going up, it's going to delay, small loss, drawdown, back into profit. If you are not grateful, simple. So that's how it is. That's how it is. So, and then the last one is just one leg where it's just gonna go up and then boom. You know, that's it. So these are the three scenarios. But mind you, watch at the precision of this. So if you're indecisive, wait for the market to come to the opening price, because you may not be sure of the structure, but the market will always be sure of its working price. It doesn't just sell anywhere. I can show you multiple things that align with this or specific entries, but it's not about me sounding smart. It's about you learning the basic and going to make money. Because sounding smart and in comment, it won't help you guys. Yeah, well, being bragging about the language, you think ngifaka terms la ngenisa isingisi asenza imali. Baba ama graduate nwabuza. Okay, so this one is a bullish continuation. Bullish continuation, okay? We're almost done now. And then we go to the real parts. And then the next one now, opening price. We have a market starting, opening down, goes up like that. That's the first move. Market was going down, coming up here. You're thinking from here it should sell. Just continues, break, retest, continues to go up. The other one, then early move, goes up, bounces here, continues. Last one, a delayed move, like a tick. Okay, so this is the early move. The early move, if you could master it, you'll make a lot of money too, because by just looking at price action, like, already done it. Yeah, well, so it's easy to actually figure it out. Delayed. This is 1 p.m. This is 2 p.m. Yeah, but the only thing you have to note here is the vertex or the corner. It's outside before 1, and sometimes it will be after 2, sometimes it will be on point. There's only 3 things. That's not a lot. Because every day you will have one of these 2 corners. It will show you this is where I'm doing this. There are other things you can use like reversal candlesticks and guys, you know, I've blown to a point whereby I don't want anything to like mess up my focus. Like I don't want to have something that will make me doubt what I'm seeing at that time. So that's why when I'm trading, I'm like, this is what I'm looking at. I know all of this stuff may sound good, nice, sexy. It's not about the end of the day, it's about money. If it doesn't make money, it doesn't care how sexy you sound. Doesn't matter. 1, 2, 3 confluences, market goes up, boom, goes up. Clean. Okay? So now let's go to risk management and then we go to the charts. So this is what you actually came here for. Revelations. So delete on grammar group or delete all of those groups. That's a discount deal. Anyway, see your pants. Okay. So the most important part is the one that I was showing you right now. That's where your whole trading will be based from now onwards. You don't discuss, you don't try to prove to anyone that you're profitable. You don't try to argue. There's a group for 714 method traders, that freelancers, 714 method traders. It's called a chat box. I call it a chat box. You can go there and meet other people who are using 714 method. When you blow, you cry together. When you make money, celebrate together. Easy. Come celebrate some groups because this thing is, when you're starting trading, hey, it's a scam, hey, you're joining these scammers, hey, it doesn't work, this thing is fake. And as soon as you start making money, they come to you, they make you mashonisa now. Like, hey, my prank man, hey, I'm showing 1,000 fees. Hey, ngana man navigate. Yeah, okay. So now, risk management. So under risk management, I said my risk and reward. My risk is, let's say 50 pips, minus 50 pips. And then my target, this is more like one-to-one risk. My target is 50 pips. Okay? Or the second scenario, if you want to, or here it should be 30 actually, for 50 pips. If you are targeting for 100 pips, then you're risking 50 pips. And your target is 100 pips. Both reachable, but this one, less stress. I don't like stress, guys. I want money, not stress. Okay? So, now, let's say, let's suppose your target remains 50 pips. You are using a lot size of 0.01. The pip value of that, it's 2 rand. Okay, it's always that times 2. Gold, if it's move a pip, you're getting like times 2 of the value. That's called the pip value. And that's what makes Nasdaq to be like violent and gold, other stuff small, because the pip value is not the same. That's what makes the difference in all of these currencies. And you're like, Nasdaq is paying, hey, your state is paying. It's because of the pip value, cost is different. But I like gold because pip value for gold is like average. I will show you this, how you can simplify it, okay? And then we have the amount. So if you are trading 50 pips using 0.01, the pip value is 2 rand, which means on the trade you're making 100 rand. You're making 100 rand on the trade, right? Same setup. 50 pips, now the lot size is 0.10. Pip value remains the same. How much you making now? 1,000 per trade. Your target remains the same. You don't change it. You change the lot size. I'm showing you this for people who are using different accounts. You're using one lot, pip value remains the same, doesn't change. Value, you can't change the pip value even if you want to. Duh. Pips, targets, and then over here you're making 10,000. Same setup, same trading time, specific execution time, same target, same profit every day. Or you want to guess which one you want? The guessing games work. Is this a break? Is this a buy? Oh, it's manipulation. So now, having this understood makes everything else clearer. Because now, this is just one trade, depending on the account. You know, you don't trade your problem. Everyone is trading their own problems. We have someone here who's just stressed by paying rent. If you make 100 rand a day, you can pay your rent, depending on where you're staying. We have someone who has 4 baby mamas trading 0.10. You know, sufficient pampers are bought in a month. But usually this is how I explain this. Over here, it's the hustler, 0.01. The hustler, okay? The employed here, or employee, 0.10. You're making your 1,000 every day. You're making your money, you're trading normal. No rush, guys, no rush. Speed. All of this rushy business, you want to make money now. That's what will get you into a lot of trouble. Relax, you will make money. And then we have one lot. This is the retirement group. Not mainly retirement group, but people who, if you know you have money, you know you have money. Yeah, because sometimes with seminars, you could differentiate and say, I will do a seminar for rich people, but you're going to end up talking to 2 people. Yeah, but if I'm like this, then I should try to make it fit for everyone, because not only we should go for people who can afford, but also to show other people now you can do it too. Because as I said, I started small. I didn't get any funding from anyone. I never got any support. Yeah, I'm self-made. Self-made. So, but this is all the thing. So now you take the same amount now, that's 100 rand times 5. That's 500 per week. That's 1,000 times 5. That's 5K per week. That's 10K times 5. That's 50K. You are doing the same thing every day. And it gets easier every day because you know if you are wrong, you are accountable. It's easy to pinpoint. Accountability simply means if I'm wrong, I don't just say, yo, I failed. Where did you go wrong? If you can explain where did you go wrong, then it's easy for you to correct that mistake in the future. And the more you keep trading this way, the more you minimize all of these mistakes that you're going to make. That is 50 pips there that is shaded. That 50 pips, that is 20 minutes. We counted the candlesticks because each candlestick period there is like 5 minutes. All of those 50 pips, you are making this amount every day. So why is it difficult for me to make 100,000 every month? That's my minimum. Every month. And I don't trade every day. I trade here and there. Yeah, it's possible. Don't join mentorship. Don't pay. I don't do signals because I love peace. Do this, put it into practical. Trade. You will see. Money will come. And you know what the proudest part about this? You make your own money. You're not relying on Umasha to say something. You're not relying on anybody to come and say, hi, this, I have a discount here. You focus on your own thing. There's nothing that is exciting than making your own money. Because you know what's your quality muntu. Yeah, bro. This is the structure. This is your target structure. How do you get this? You do this. Or you do this. These two things are the ones who are going to pay for your bills, pay for your house, pay for whatever you want. Understanding this will clarify every problem that you have. This is free. But following this will make you money. Why am I showing you this? Don't be stressed about hey, what's other time for 714 method? This is where I've made most of my money. The highest I've made in a day is 1.4 M. 1.4 million in a day, this is the highest I've made. Not on one trade though. Not on one trade. I think on that day I took like 3 or 4 trades. It wasn't just one trade, like boo, boo. That's why I'm saying, don't focus on this millionaire mentality because that's what puts you under pressure. Just focus on trading. Trade what you know every day. You look for this every day, you go in, you go there. You leave off for this first, you enjoy it, you see it, you withdraw. Also, trade to withdraw. Don't just trade to take screenshots and keep your money there. It's your money. Yeah, but take that money, do things that you can also see. Make feasible things first. Fun doesn't end. You can always have fun with other stuff. It's up to you. Yeah, but build a bigger house. I don't know, because in Dlenkulia Sabis, in Indlam is a double-story house. It has 3 bedrooms, 2 kitchens, 3 bathrooms, 1 office, 2 lounge. But yo, manging at I'm like yo. Yeah, ne. And it's funny, because having a bigger house, in as much as it could be brilliant and fun, you know, because at one time I was staying in 1 room. So I can see everything is here. Yeah. So now when I'm upstairs, I'm thinking what is happening downstairs. It's stressing me out, you know. And also a house maintenance. Back then I was stressed by just buying 1 bulb. If this guy goes off, I need to get another one. Right now I have a whole house. Like each and every room has a globe of its own. If it goes busting, I need to change. Just like if the fence alone have like 16. 2 months back, they all, I don't know what happened, but they all got burnt. I had to change them. Like, that's why I realized, like, hey, I missed my 1 room. Okay, so let's go to the charts now. Okay, so that's where it all gets resolved. That's why it all gets resolved. This is easy. Easy, 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 easy. Okay? And please, it's easier to learn from me. Just listen to everything I say, challenge it in the chat. Because if you are going to listen with an intention to question me, you are going to have a problem because you will take it from simplicity to making it difficult. This is not philosophy. This is not a study of some. You play the fool's card. You listen and you do. Okay? And I will not judge. Say what?